This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, May 21st. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals Studio. Let's talk precious metals. We've had an interesting year and a half as far as the currency markets are concerned, and the action in the dollar has dictated price in the precious metals markets, and the recent activity that's taken place may be creating a tremendous long-term buying opportunity for both gold and silver. If we look back to the beginning of 2017, the dollar index was trading at around 103.85. And what happened in the next 14 months is the dollar fell precipitously, dropping 15% all the way back down to 88.25 as far as the index is concerned. Now, since February, we've seen the dollar rally from 88.25 all the way back up to 94 today. That's a 6.5% jump in the last 3.5 months. And what this has done is it is creating a strong buying opportunity as far as gold and silver are concerned. If you look at gold traded as low as $12.80 after trading as high as $13.65, and silver traded as low as $16.16 after being as high as $17.65. And this opportunity may be short-lived based on the current situation. What we're looking at right now is the yield on the 10-year Treasury has broken up to 7-year highs at 3.11%. Now, the Fed is talking about raising rates, but if the Fed continues to raise rates, the question is, who's out there that is going to buy our paper? The bottom line right now is the dollar has rallied nicely, up 6.5% since February. But are we potentially getting close to a peak? And will the dollar roll over soon? Now, if the Fed continues to raise rates, who's going to continue to finance the debt situation that exists here in the United States? And a lot of people have stopped talking about this, but the bottom line is if you look at our budget, we're going to spend $1 trillion more this year and $1.25 trillion more the year after and the year after that. That means our deficit, which is already $21 trillion, is potentially going to reach $25 trillion very quickly. And if you look at the current situation and the overall exposure that exists throughout the market, right now may be one of the better times to look at precious metals as a way to diversify your portfolio. If the dollar is about to put in a short-term top, and some people believe that top will be somewhere between 94 to 95.5, then typically gold reacts by putting in a bottom. And if the dollar is potentially headed lower than the lows that we saw in February, then precious metals will regain some of their stature as a way to diversify your portfolio, especially considering what will happen if interest rates are going up, as far as the stock market is concerned, as far as real estate is concerned, and as far as the bond market is concerned. All of those markets look a little bit toppy. The dollar looks a little frothy based on where it sits today, and precious metals may be positioned in one of the better areas as far as an accumulation point. Now may be one of the better times to talk to a precious metals expert on how you could potentially get involved in precious metals for your individual portfolio. Give us a call today so we can go over all the options on how you might benefit by owning precious metals. Thank you.